Hey guys, I'm going to shoot straight in this video and I'm going to talk about strategies that make a lot of money. So you're going to need a shovel to rake in all that cash. And if you're broke, that's okay, because I'm still going to be talking about small account strategies despite the title of this video. Now, I do believe that anyone can get to $2 million easily, but obviously it's not overnight. You have to be like a tiger. You have to be super resilient. But the strategies that I'm going to show you, if you're resilient over time, you're going to achieve something similar, because option trading is just a formula to wealth. Okay, I'm still on the path to 5% per month, and when I had $10,000, it was actually much easier to get to $20,000. But as my portfolio grows, I have to manage risk properly, and I'm going to be talking about risk management in this video, because it's not smart to have your money in just one basket or in one position or in one sector. I'm going to tell you exactly how I diversify, which positions that I have in my portfolio, and how I think about trading options. Because one of the most important things is how you mentally prepare each trade to enter and exit. Now, a lot of my trades can be controversial. For example, if I type in Tesla, I'm going to show you why my position on Tesla made a lot of money. However, it's a bit controversial. As you can see right here, I have numerous positions on Tesla. 1, 2, 3, 4, 5, and 6. I have 6 different positions on Tesla. These are all small account strategies, and combined, I put $33,000 into these positions. Now, what I'm doing is I'm actually bearish on Tesla, and I've been bearish for a long time. So if you see, some of these options have completely decayed to $1 and even worthless options. That's a good thing, because I am selling these options and I'm making money so long as Tesla as a stock doesn't rise too much. And I've been bearish since the stock hit about $200 per share. I'm going to open up this trade right here, the 370 and the 380 call credit spread. Now, as you can see, I made a straight $500 on this trade right here, and this trade cost me about $5,000 to open up. In fact, it was $4,500 because this position was $5,000, but because I collected 500, it was only a $4,500 position. So very small account friendly and in a pretty short amount of time. Now, if you duplicate this type of trade over and over again on a monthly and on a quarterly basis, then over a couple years or over a few years, you're going to reach some pretty ridiculous big numbers as long as you're consistently closing for a profit. Now, I want to show you some more controversial plays that I've made that keep making me money. Although the general public might not agree with me, other YouTubers might not agree with me, I am just trying to grow my portfolio and show my students in my Discord community how to do the same. So I'm not really concerned with what other people think, as long as I'm getting good results and I'm also helping other people along the way. So one of those most controversial plays that I have is coin. And I've been selling coin call credit spreads for a long time as well. And I'm actually going to deconstruct that call credit spread and open up a new one so you can see exactly how it works in just a moment. But coin is a stock that I am very, very bearish on. In fact, I'm going to show you my watch list of very bearish stocks. Right here, my watch list of just about 5 stocks. These are the stocks I am most bearish on. Now, I didn't have enough balls to actually short these stocks or buy put options on them, but I put them on the very bottom of my list because I was very bearish on them, and I keep playing bearish strategies on them with small amounts of money. Because look, these stocks are very volatile. You can make a lot of money, but you also want to be careful. And that's why I also have a position on VIX, which I'm going to show you in just a moment. But first of all, I want to show you a call credit spread on coin. And I have a lot of strategies that I'm going to go over today. So make sure that you stick to the end of this video if you want really good results with option trading. So I'm going to go to trade coin options, and I'm going to show you this strategy right here of a call credit spread. So I'm going to go to sell call. I'm going to go to the current stock price. So check it out. I don't think that this stock is going to rise that much. It may rise a little bit. So what I'm going to do is I'm going to pick an expiration date. It's really important to pick an expiration date that gives you some time, because without time, there's no money. With options, a lot of their value is because of the time premium within that option. So if I were to trade November 25th, because today's Thanksgiving, in just one day, then this option is not going to have that much premium. And that's why you can see right here that as soon as I go up just a little bit, the premium is only $24. Instead, what I'm going to do is I'm going to go out, about 2 to 3 weeks. So I'm going to pick December 16, which is about 3 weeks out from making this video. If you're watching this video in the future, that's totally okay. Just copy and paste my logic, copy and paste the way I think about option trading, and just utilize it for your own benefit. Okay, I'm going to go up to about $50 or so. So as you can see here, I'm going to expand this option. The delta is 0.41. So this is actually a pretty high delta, so I don't want a 0.41 delta. I'm actually going to go a bit higher. My rules are typically the delta has to be about 10 to 15, but because I am very bearish on coin and because this is a small position for me, I will actually be a bit more aggressive. So if I expand this, 27 is fine. Now, this is not typical for me, but when I look at a 27 delta on a stock that I'm very bearish on, I've been bearish on crypto since the dawn of ages. I have never had much money in crypto because I just can't value it. When I went to university and I got my degree, I value companies based on cash flow and metrics. And for many of these companies, and for crypto, it doesn't have any cash flow. It's similar to gold or a commodity. So for me, I have no way of valuing it, and that's what makes me very afraid of investing in those type of currencies. Now for coin, I'm pretty bearish because of the movement with crypto itself. So again, I'm gonna go for a 27 delta. I'm gonna sell this $55 call option. Now, if you just sell a call option, you have unlimited max loss, which is not good. I would never put someone in an unlimited max loss position, and I wouldn't put myself either. So I'm gonna tell you exactly what I personally do, which is I go ahead and I go to buy a call option, and then I buy, for example, the 60. Okay, let's actually expand this. The 60, okay, that's good. The volume is great, and the implied volatility, woo! This is beautiful, guys. All right, so the implied volatility I'm looking for is above 40 because implied volatility is a good thing as an option trader. In fact, that's how I pretty much make a lot of my money. I look at high implied volatility, I make a good decision on that high implied volatility, and I get paid the big bucks because higher implied volatility means that there's more premium to be made when you're selling options, okay? So for this option specifically though, I am buying. The other one probably has really high implied volatility too. Probably has about the same, 104, perfect. So I'm gonna sell this 104 volatility, as you can see right there, and then I'm going to buy the 60. Okay, so I'm gonna go ahead and buy the 60. Now I have created a call credit spread. This position right here is basically saying, hey, Coinbase is not going to go higher than 55. If it does, I will lose money. However, the chances are about 27%, but for me, this is how I make money. My opinion is the chances are lower than 27%, okay? In theory, each option trade is about even money, right? If it says about 27 delta, and you know, the chances of you making money are going to be about the same, right? But for me, when my opinion differs from the market, that's where you actually make money. Because trading is all about expectations. If something is already baked in to do really well, well then the call options are going to have a really high premium, for example. But if it's not baked in, but I believe something's going to happen and I'm right, that's where you can make a lot of money. And for me, I differ on Coinbase's fundamentals. I'm really bearish on the fundamentals, and I don't think this stock is going to be worth $55 in the next 3 weeks. So that's where I can make money on this trade. As you can see, I'm making about $81 on roughly $400 worth of capital. So that's about a 1/5 or about a 20% return in 3 weeks. That's how you build a $2 million account when you make many smart decisions, many small plays like this one, where you don't need a lot of money. You don't need to have a $2 million portfolio. You don't even need to have a $10,000 portfolio. This is a $400 trade. And I know a lot of people out there are trying to grow an account. So again, not everyone is going to get to $2 million, not because it's really hard, it's actually simple, but because people quit. They can't stay the course of investing over the years and over the decades. They don't stay the course, not because it's impossible, but because the journey just takes too much time and it requires consistency. And consistency is something that humans are not very good at. And I've had a huge problem with consistency myself. And the best thing that you can do is watch my videos and just understand that option trading takes some time, but if you invest your time into it, you're likely to see really good results. As you can see, very good trade right here. Let's move on to the next controversial trade that I made, and that's going to be the VIX, okay? The VIX is actually a very interesting security that you can trade. Now, I typically don't trade the VIX, but I'm going to show you a very interesting setup right now. Check it out. Over the past 1 year, The VIX is actually at the very lowest it's actually been at. And now the VIX is specifically tracking volatility. So when the market goes down, the VIX typically, pretty much like 99% of the time, goes up. Okay, the VIX is tracking how volatile the stock market is. If the VIX is low, that means people are not expecting the market to fall lower. Right now, the VIX is basically saying the bear market's over. Everything's going to be fantastic and great, and everyone's going to make a lot of money, and we're back in the bull times. Actually, in the past year, this is the most optimistic the market has been. Now, it's Thanksgiving. Hope you guys are enjoying your turkey, but I'm not the most optimistic right now in the market. I don't think we're actually done in the bear market. And even if we are done, I don't think it's just going to be a straight up line bull market right now. I think it's going to be bumpy as it's been for the past year, and I don't see a reason for the VIX to be at its very lowest point. So what I ended up doing was I started a small position by selling the $12 puts on VIX. And I'm basically saying that the VIX should not go down more. If it does go down more, that means the market is roaring a lot higher. And we're already at a 52-week bottom, so that's one of my controversial plays. And this specifically is how you reduce your risk. Because when you play with the VIX, right, basically if the market goes up, you can lose money on the VIX. But if the market goes down, you make money on the VIX. And because you make money as the market falls, you are lowering your total risk in your portfolio. So that's one of my controversial plays. And the most interesting thing is, I didn't really lose money on NEO. I got out of NEO and I posted in my Discord in the 30s. And I didn't lose money on Palantir either. You can see right here that I still have Palantir puts. What I did lose money on, I'm going to be completely honest, is Oatly. But I'm going to tell you why this is not a problem. Most of my main positions are doing really well, especially when you factor in options. For example, if you look at Amazon right here, I'm down about 21%. But what I'm doing on Amazon is I'm selling covered calls, and those are bringing me in consistent premium. I have so many positions, but as you can see here, Amazon 115 call, I'm up $2.5 thousand. And I've done this over and over again. So most of my stocks are at a gain, even if you can see they're at a loss right now because of the option premium. But one stock I am down on is Oatly. But I'm going to tell you how I manage my losses, because this is really where the good trader is made. Every trader can buy some call options and sometimes win. But how do you actually manage your losses? For me, my current position on Oatly, first of all, I was smart enough not to make it a huge position, because any stock that's not a blue chip stock, meaning it's not one of the top Apple, Microsoft, Google, ExxonMobil, whatever, one of those big top 10 companies or big top 50 companies, I am very cautious on, because there's less information. There's less demand for these stocks. For me, I only put 0.31% of my portfolio in Oatly. Now, I was a little bit too safe. I think I could have went about 1%. But still, I am down 46%. I've actually gotten my average cost from $4 down to $3 because some of my positions that I'm running right now are selling put options. And as I get exercised and put this stock, my cost basis is going down, which is a good thing. I'm very happy about that. But the way I'm managing this position is by holding tight. This is not a bad company in my opinion. I've seen it been used everywhere. I've been to like 5 countries in the past 6 months, and I've seen it used in 5 different countries. In Europe, in South America, in US, it's all over the place. Western Europe, Eastern Europe, it doesn't matter. Oatly actually has a really good business from what I am seeing. And for me, that's really important. I want to see that the business is actually doing well. People are actually consuming the product, and that is the case in my understanding. So for me, I'm selling put options to get in at a cheaper price, and I'm building my position. Now, it is very dangerous if you build your position at 10% plus. If you start investing, let's say you have $10,000 and you put $8,000 into Tesla stock and Tesla stock ends up falling, guess what? You don't really have room to average the cost lower because you're already 80% in the stock. So by definition, if you want to actually diversify, you need to be less than 10% in one single position. That way, if the stock does go down, you can diversify further. Now, a lot of my positions are very small. They're only $500 positions. This is a $500 position. And one of the best strategies that I like to use is actually iron condors. You've seen me use that on Tesla. I actually opened up another Tesla iron condor right here, 155 on the lower side of the puts, and then 202.5 on the lower side of the call options. Now, for iron condors, I'm only putting up a couple $100, so maybe $500. And it is important to manage. These positions, what I'm hoping happens, so this one's pretty fresh and new, but I'm going to scroll down and find an iron condor that I still have open. I'm going to tell you how I actually manage this position for the best gains. So as you can see here, my current Tesla position, the 132.55, it's up $130, and I'm gonna open up this position. So one of my cheat codes is using iron condors to make a lot of gains, because with an iron condor, you can make a lot of money without even putting up that much up front. Like I made $130 here. I've only opened up 5 contracts on this position, so very small account friendly. And this position right here, what I'm hoping happens is that Tesla stays between 130 and 255, so it makes my life easier. So I don't even have to manage this position, I just wait until expiration. Now, the way I do manage these positions, if they do go in the money, is I will typically close it out. So if this stock goes completely against me, let's say that Tesla falls to 130, or let's say that Tesla goes up to $300, right? On its way up, I will monitor the stock manually, maybe like once a day for 5 minutes. And if it goes up to $255 and actually hits this strike, then I'm going to start thinking about closing this position. And as it moves up, if I still see on the technical chart and on its momentum that it's going to continue rising, I'll end up closing this position for a loss. However, that really only happens to me about 1 out of 10 times. So 9 out of 10 times my life is really easy, and 1 out of 10 times I'm closing this position. And the reason I close this position is because I never want to lose the full amount. Say that this iron condor has a $500 collateral. I never really want to lose more than $250, $300, because that way, if I'm winning 9 out of 10 times, and on my losses, I'm managing my losses, and I'm not losing too much on my losses, then that's going to be a successful trading strategy, okay? You want to really manage your risk and your return. That's the most important thing that I learned in my financial education. I also have a QQQ position. This is basically a very short-term trade. If you want to learn about zero DTE strategies, which is basically 0 days until expiration, which is what I just did right here, let me know in the comment section, because what I'm doing with QQQ is I'm specifically selling put options on a very short amount of time, and I'm collecting premium and these type of short-term options have very high theta. And I do that a lot with weekly trading, but with QQQ specifically and SPY, I am actually doing them on Mondays, Wednesdays, and Fridays, because these options are actually expiring 3 times a week. If you want to see how I cheaply trade QQQ and SPY specifically, SPY is actually a bit better, then you should check out this video right here.